Hello, everyone, and welcome to another edition of the AI Cash Grain Podcast. Today is October 18th. I'm Satish Nandapurkar, Director of Data Driven Strategies for Quantum Hedging. In this episode, Cy will come along and talk a bit about what happened in both the corn and bean markets. Both markets kind of fell out of bed this past week. Corn was down 11 cents at 404.75. Beans were down 35 cents to 970. Then Kevin's going to come along and talk about what the models are saying. We've switched up our models to talk more about next year's contracts, sort of the storage contracts for both corn and beans. So Kevin will come along and talk about what those models are doing, and then I'll talk a little bit about the Rex. At this point, we're near the end of our program. The only thing we really have to do here is sell the last 15% at the end of this month, at the end of October. It's apparent the models are kind of pointing mostly sideways for the next couple of weeks. So we're going to be recommending that you sell 15% of both your corn and your beans at the end of the month. And therefore will be at 100% in the end of the program. At the end of the podcast, I'll come back and talk about what we are doing with this podcast going forward. So we're making some changes based on your feedback. So I'll talk a little bit about that. But first, let me go to Cy, who's going to talk a bit about the markets, what's going on in corn and beans, and what the traders are looking for.
Thanks, Satish. It kind of feels like it's more of the same, and it's Groundhog's Day here. We got lower prices, and harvest pressure continues. The one interesting thing we are seeing from a fundamentalist chair is that the demand is showing back up, both in corn and beans. And, spreads are popping a little bit. Cash markets are getting firm in the Gulf. So I think there's some chatter around thinking, oh, okay, we're going to find a bottom. I'm not so sure quite yet as the market still needs to absorb sort of the last 25% of harvest. We have bigger yields on our models. That's kind of scary. And we got really good weather in South America. So unless something, major in the demand side really gets fired up, I just think, we kind of sideways to lower in both corn and beans from a fundamentalist standpoint. Maybe we get to harvest complete, stuff's in the bin, then you can start to see some rallies if demand's sticking around for the next month. But for my chair, it feels like we just drift lower, looking for large demand to pop up and, harvest to be over. Kevin, do our models have anything different?
Hey, thanks, Cy. Another week, really with the market kind of selling off again. We're still kind of under the backdraft of really strong yields. Our yield reports are now standing about 50% of the 10,000 farms we collect. Those 50% are in, and right now we see just really strong yields. Illinois is just knocking it out of the chart for corn, and Iowa as well is also doing really well. So I wouldn't be surprised to see another substantial revision from USDA on the corn yield higher, either in their November report or in their final report. But I think the market's trading that news right now, and we're seeing prices really start to slump. With our forecast, we see kind of the same pattern. Seasonally, it's a hard time of year, and our market expects kind of more weakness than normal, given the strong yields we're seeing. As we look forward to kind of the end of the calendar year, not a lot of hope that March corn will trade anything beyond where we're at today. If anything, the chances are for kind of further weakness as we move forward. In beans, our model wants to stay bearish, but that's hard to kind of validate in the last week with things kind of moving lower. This is a seasonal time of year that we usually see some recovery in beans, but again, the strong bean yields that we're seeing out of the fields are still kind of weighing on the harvest pressure as we go forward here. But once we get beyond that, there might be some more upside potential here, especially as we start to focus on South America and the La Nina that potentially could kind of disrupt some supply potential out of South America. So that's what we've got this week. Let me turn it over to Satish.
Thanks, Kevin. As I mentioned at the beginning, we're coming to the end of the program. Our goal with the AI Cash Grain product was to outperform our benchmark which was a predetermined strategy of selling an increasing percentage of bushels each month from January through October. We're down, that benchmark is down to its last 15%, which it will sell at the end of October. With respect to corn, where we are at is we're 85% sold. The benchmark is 85% sold. We're ahead of the benchmark. We're tracking to a good 9.5 cent outperformance versus the benchmark when we issue this last sell. Unless something really extraordinary comes out of the data, I'm assuming the models will tell us to sell the last 15% at the end of October. And when we do that, we'll be about 9.5 cents ahead of our benchmark at the end of the program. With respect to soybeans, same thing. We're 85% sold. The benchmark's 85% sold. Unless some extraordinary data comes out, unless something extraordinary happens, I think right now the models are saying hold. I think the models are going to say sell 15% at the end of October to match the benchmark and close out the program, in which case we will track to a 4.8 cent outperformance versus the benchmark. So in both cases, we'll be outperforming the benchmark. So very quick summary, markets were down, both corn and beans were down a bunch. We've got the new forecasts going further out. We're recommending holding for this week. We will likely be recommending selling the last 15% at the end of the month on October 31st. But the real news that I wanted to pass along is what we are doing with the AI Cash Grain podcast, because we've heard some of your feedback, and I'll be going into that right now. So let's talk about those changes. We have made the decision to end the AI Cash Grain podcast on October 31st. And that's why I say we're recommending, part of the recommendation is to sell, because the models are going to tell us that, and we're ending the podcast after that sale. Now, why are we ending the podcast? It's really because of feedback we got from subscribers and from other farmers, which asked us to continue providing AI-driven insights, but do it in a more hands-on, customized way, unique for the farm. So while we were selling grain, trying to beat a benchmark, what we really found was people wanted us to give them recommendations that took their insurance into account. When they're in the money in insurance, don't sell grain, which is the intelligent thing to do. And we've provided that service, and we really want to build upon that service, is to provide a more customized, tailored approach using AI to give us views on where markets are, but then taking those views and adapting them and customizing them to each farmer's unique situation based on, do they have margin protection, revenue protection? Did they buy ECO, SCO? What are the things that they've done in their portfolio? So we are going to have a free subscription offering that's in development, a model farm type of offering. But the main offering we're going to have going forward is to actually manage your farm from a marketing perspective, an AI managed acres program, where again, we put everything into our system, we look at the risks, and we let AI help us, aid us in terms of how we should lean our position, bullish or bearish. So more of that should have come to you in an email. That offering, please check your email as to what that offering is for all the subscribers of the podcast. Again, the approach is very much this managed acres program, very much a custom tailored approach where we tailor the risk management with futures and options and cash sales around the economics of the farm and the insurance that's already been bought. There'll be a dedicated advisor, market-driven emails, a weekly podcast like this. It'll be a different type of podcast, but a weekly podcast like this, quarterly meetings with your advisor, and an annual crop year performance report. There'll be some fees. $4,000 annual management fees, $15 per side. But again, as a subscriber, you should look in your email for some special offers with respect to this managed acres program. Again, just wanted to say thank you for being a subscriber. We're getting down to the end of this, and we hope you've enjoyed it. We've been really happy that our models and our simulations have gotten us to beat the benchmark in both the corn and soybean case. So we've been really happy with that. But again, we've been thinking about how to evolve this, and we're really excited about that managed acres program. So feel free to email us or call us if you have any further questions. I'll reiterate this again next week on the podcast. Same type of information. Thank you.